Welcome to the May 2013 Cambridge House Investment Conference. I'm Tara Sweder, corresponding for SmallCapPower. Today's experts, analysts, and research reporters will be answering all your questions about what is going on in the world. From China to resources, we have it all. Stay tuned. Rick Rule absolutely needs zero introduction. His topic today at the Cambridge House Investment Conference, buying assets on sale. We all love a good sale. Bear markets make you rich. Tell us about what you talked about today, Rick.
Well, the thesis is simply that when we buy physical assets, we shop for them well. We look for goods that are cheap. And when we buy financial assets, we don't seem to exhibit that type of acumen. We're here in Vancouver, BC, close to a retail shopping center called Pacific Centre. If you were in Pacific Centre and there was a sign in front of a store that said all goods 75% off, everything must go, no reasonable offer refused, that's bear market merchants. On your right-hand side, there's a different store that says bull market merchants. No deals, no bargains, nothing ever cheap. Prices may be higher next week. Where would you go? You're a good shopper. If you went to shop for that blouse, you'd go for the place that was 75% off. And yet, when stocks are 75% off, people think it's terrible. It's odd, it's perverse, but it's true.
Now, there's perspective for you. Bull versus bear markets. That's the best analogy I've ever heard, Rick. With that said, what stocks are you buying?
We're buying a wide range of stocks. And I need to say at the beginning of the discussion that just because we're buying them doesn't mean that other people should buy them. We have psychological and financial staying power. But certainly the range of stocks that we're buying now is the greatest relative to other markets that we've seen in 10 years. So as an example, the developmental gold juniors like Lydian, we're buying it. We've been buying it for a long time. We're well underwater in that position, and we keep buying because it gets cheaper and cheaper. Ivan Platts seems to be a very, very, very good juxtaposition of risk to reward. We're buying some bigger companies like Cameco and Potash Corp because we think over time we're going to be rewarded. We are buying the proxies for physical precious metals, in particular our own.
The proxies. Can you explain that, what that is?
Yeah, the certificated ones. We buy Sprott physical gold because it's our own, Sprott physical silver, and Sprott platinum and palladium. The idea that you can buy physical gold and silver and platinum and palladium on the New York Stock Exchange at a discount to spot and not have to pay storage fee and insurance fee is incredible. Buying gold at a discount is something that only occurs in markets like this.
Sorry to interrupt you. Has that ever happened before?
Never in my experience.
Really?
Never in my experience. 3 years ago, when silver was in vogue, the Sprott Physical Silver Trust sold at a 30% premium to net asset value. Now it sells at a 1% discount. You can buy convenient certificated silver for less than the price of spot silver and not have to store it, not have to insure it yourself. This almost never happens.
Always make sure to do your own research. Subscribe to Small Cap Power. For now, I'm Tara Sweder.
Get more investing advice from our roster of experts, including Rick Rule, Mickey Fulp, Eric Coffin, Brent Cook, Steve Palmer, Tom Calandra, and James West by visiting smallcappower.com/experts. smallcappower.com, investment ideas and research.